Russell Gould, Wonga For Business.
Thank you very much. I'm going to use my notes. We're a reasonably secretive business, so I need to be careful what I say. If you haven't heard of Wonga, I don't believe you. If you haven't seen one of our ads, I don't believe you. We're an interesting business in that we're one of Europe's fastest growing digital businesses, as I'm sure you're aware. We've provided over 7 million loans since we launched about four and a half years ago. Our revenues on average are increasing by about 200% per year since we launched. And I'm going to talk to you a little bit about Wonga and talk about Wonga For Business, which is the latest, well, actually it's not the latest product, but I'll tell you about the latest product as well that we've launched. So what I'm going to touch on, the good thing is the other speakers have done some of my work for me in introducing a bit more about what the market is like at the moment. So I'll touch on Wonga. I won't spend too much time on business lending being broken because I think it's been touched on, but I'll just highlight a few key features which have kind of taken us down the avenue that we've gone down in the business space, and then talk a little bit about the product that we've launched. So Errol Damlin, our founder, one of our two founders, he's a serial entrepreneur, and he had a look at what the market looked like, looking at the different sectors out there. He wanted to do something new, he wanted to do something different. And he looked at each of the major consumer sectors and saw that pretty much each one of them had been targeted by a business that was now like a hero brand and had done something different in that sector. So you've got your retail, your advertising, your communications, entertainment, gaming, payments, betting, and there's a number of different brands there. Through that process, he decided financial services was reasonably untapped and decided that was the kind of the avenue he wanted to go down. And the key for him when he looked at financial services was, as the previous presenters have talked about, it's very opaque, it's non-transparent, it's very difficult to get through the processes. You're stuck on some very old traditional ways of doing things. The underwriting approach is horrendous. And his view was, looking at what was in the market, a customer-focused, transparent, and digital finance solution was potentially a game changer. So he launched Wonga. And what Wonga did that hadn't been done in the market before is he basically provided a solution that allowed a consumer to borrow exactly how much they wanted for exactly how long they wanted it for, and told them up front exactly what it was going to cost. They could borrow the money when they wanted, and the money would be put into their account pretty much within 15 minutes of them being accepted. Now, in the banking environment and the finance environment before this came along, that concept just did not exist. 4 years, 4.5 years later, how have things panned out? We've got over 1 million customers. This data is a little bit old now, but it's the latest stuff that we've released. Like I said, we're secretive, so I've got to use these. But we've got over 1 million customers. We've done over 7 million loans. Now, what's interesting in that loan number is we decline more than 2/3 of people that apply through our website. Probably what is the most interesting number here is the 74% net promoter score. Now, why that's important is we're probably a bit like Marmite. You either hate us or you love us. Now, what's interesting about it is with a 74% net promoter score, our customers love us, and that's what we care about. That's what we believe is important. We don't really care what the politicians say. We don't really care what the journalists write. The key for us is to keep our customers happy, because if we keep them happy, they'll keep using us, they'll keep promoting us. To put it into perspective, this is slightly outdated. says 76 there, but it's 74 is the latest number we've released. If you look at where all the typical banks are, they're all down here in the negatives. If you look at where Apple is, they're behind us. Now, it is very difficult to get your customers to endorse you in that way, and we have got to a position where our customers, as I've said, absolutely love the product that we offer and the way that we do things. So our latest product, and this is where I do need to make sure I go to my notes, because a lot of you wouldn't have heard about this. We've launched this product very recently, Pay Later. It is another consumer-based product. It's an alternative to credit cards. We're working with a few partners and adding more and more all the time. People like World Stores and the Cotswold Company. And basically the way it works is it allows a consumer to pay for their product or to buy their product right now and then pay it off over 3 months. So we charge a 7% upfront fee, and then you can pay in 3 monthly installments. It's very new. We think it's quite innovative. It's a product that's sold at the point of purchase, and we believe it's going to be pretty big. So that's our latest product. The one that I built and launched is the business product. And to help explain why we went into the business market, we recognised when we first started Wonga the need to be able to obtain cash and capital when you're growing a business. We had trouble obtaining cash in the UK. We had to go externally to get money when the business was first started. And the thing about small businesses, as the previous presenters talked and mentioned, the traditional lenders simply cannot support the way businesses are running today. This is just some of the headlines that I picked up more recently. And you know, to recommend a Swedish bank, okay, I'm sure they're great, but the fact that the UK banks can't support small businesses in this country is terrible. What we did is we had a look at what the market looked like, and we had a look at long-term lending, we had a look at short-term lending. Our skill set is in the short-term space, so we decided let's evolve the way our consumer product works in the short-term space and make it suitable for businesses. So we investigated what the need looked like in the market, and we recognised very quickly that banks were withdrawing overdrafts from SMEs if they weren't using it often. They were charging horrendous fees if you weren't using your overdraft often. They forced you to take a loan for longer than 12 months, and if you paid it back early, you paid the interest for the entire period. Even though they said it is there's no early repayments, you still paid the full interest regardless. And we just felt it was unbelievably complicated from an underwriting perspective. The fact that and I'll talk a bit about it shortly, but the process you've got to go through to get a loan underwritten for a small business where your time is your money. It's absolutely essential that your time is spent in building your business and managing your business, not making the bank manager happy. Just to kind of reflect on what the process looks like today, still for a traditional lender. Effectively, you've got to provide business plans, forecasts, marketing plans. You've got to sit down with your bank manager, you've got to bring in your co-directors, you've got to fill out tons of forms, you've got to convince the bank manager, wearing your suit and tie and whatever it might be, that your business is good and they should lend to you. Once you've convinced the bank manager, that whole package then goes off to the credit department, which the bank manager's now got to convince that they should lend you the money. And the process is ridiculous. It takes typically weeks, and I think it's now 60% of bank lending requires some form of security, the director's house, as was mentioned earlier. I'm just going to flick past that and start on this one. My slides are slightly not in order here. Now, what is interesting too, one of the things that we looked at is how people are using how people are using their finances, and a good business is employing all of their capital all of the time. You know, money sitting in the bank is money that's not working for your business and not growing your business. Now, what that means is, if anything does go wrong, you know, equipment breaks down or somebody pays you late, you get into a position, or you get a great stock opportunity, you get into a position where you don't have the cash or the resources to purchase that or to cover yourself for that period. And we know 73% of small businesses will be paid late in the 12-month period. We know roughly a third of businesses will suffer from some sort of cash flow crisis in a 24-month period. And those are not bad businesses, those are great businesses, really good businesses, thriving businesses. But for some unforeseen circumstance, they have got into a position where they don't have enough money in the bank on that particular day or for that particular week or month. Sorry, I'll go back to my previous slide. So with that kind of environment in context, we decided to launch Wonga For Business. And effectively what we do is we provide short-term capital, so short-term cash. We try not to look at it as a loan. We very much see it as capital, as working capital, as a way for you to run your business. We allow you to borrow from 1 to 52 weeks. You decide how long you want it for, from £3,000 to £30,000. You decide how much you want. You can borrow it for 52 weeks and pay it back after 2 weeks, and you will only pay the equivalent of if you had borrowed it for 2 weeks. From a charging perspective, because I'm sure I'll be asked that question if I don't mention it, we do charge a 3% fee, and we charge 0.5% per week. So the shorter you take the money, the less you pay. To put that into AER terms, it's 26% per annum. To put it into APR terms, because that's always the question that comes up, if you took a 52-week loan, it's effectively 29%. So in most cases, I'm sure some of you have got corporate credit cards, it's probably better than the corporate credit card rate that you're getting if you take into account all the fees associated with that and the interest. How do we do it? So one of the things we've learned with the 7,000 loans we've already done on the consumer side is how to take a lot of data very, very quickly and build an algorithm around that data to make an instant decision. So what we've done for business is effectively we've taken our consumer algorithm, we've adjusted it in parts to accommodate the directors, and we've built another algorithm that sits alongside it that looks at the business itself. We put the two of those together and kind of create a super algorithm which allows us to, following a 10-minute application process the first time you apply, 2 minutes the second time, to make an instant decision and to transfer the money on approval 5 minutes later. So if you think about the way the banks have worked historically, where it is, you know, days and weeks and sometimes months to get the cash out, we've reduced that down to effectively, if you're a second-time customer, less than 7 minutes, which we are incredibly unhappy about because we think it's far too slow. Just to put it into perspective, and I haven't got everybody's on here, I'm sorry, but in a scale of minutes to weeks, pretty much everybody on the right of us is 48 hours plus, going right up to 4 weeks plus. Where are our customers? At the moment, being a digital business, we've got customers all over the UK at the moment. This is slightly old now, the percentage have moved up slightly, but we are lending all over the place. The types of businesses that are using us are very, very good businesses. They range from small limited companies, maybe turning over 100 grand, right up to kind of 5, 10, 15 million pound businesses. And they're good businesses. We have purposely set up the stall to provide a solution for good UK businesses and the experience we've had so far and the demand has been awesome. We've controlled the build so far. We've only been live for 9 months. We have probably been a little bit cautious initially, and we're starting to open that up quite significantly now. We have only catered for limited companies and limited liability partnerships so far, primarily because we can get more data from those for those types of businesses. But our aim is to move into the sole trading market, to move into the entrepreneur market and space, and yeah, pretty much open ourselves up to every single business out there. There are so many different data sources. The more data we can get, the more informed we can be about the business, the more we can monitor patterns and offer loans to new and different businesses as they evolve. That's the end of my presentation. If you do need short-term cash, you've had 3 great ways of getting it. I hope you found it useful.
Hi there. So presumably many of your customers have relationships also with the big lenders. How do the banks react to their customers using your services?
To be honest, I don't know. We haven't talked to the banks typically about their customers, but their customers are using us. What is very interesting is the feedback we've got. We're building a number of case studies at the moment in kind of anticipation of a much bigger kind of promotional push. Is that they have used us simply because they found the process they had to go through with the bank just far too not difficult, but time consuming. So they have the bank as an option, but they're choosing to use us. I mean, if I'm blunt about it, I think the banks will see us as a threat. However, we are in a space that they don't want to be in. They don't want to provide overdrafts. It's too costly for them. They aren't able to make instant decisions and turn them around, turn loans around like this. So it's a space that I don't think they mind losing at this point in time. However, this is how they have got their bigger customers early doors, so I think it will be an issue for them longer term when they start getting aggressive and competitive again. Maybe then we'll move into bigger loans.
Hi. Actually 2 questions, so I'll try to put them in one. First one is how many businesses do you turn down? What's the percentage? And as well, why do you not charge riskier businesses higher interest and less risk business lower interest?
Okay, the first question first, because it's an easy answer. We've not released any numbers yet, so I can't tell you. What I can say is we started off reasonably cautiously because we needed to understand this space first. But our approval rates I mean, we're very happy with our approval rates at the moment. So we're not uncomfortable with where we are, and as we learn more, as we increase our data sources, we will accept many more than we are now. We'd like to accept everybody if we could. And then, sorry, remind me what was the second?
Was why do you not vary interest rate?
Yeah. So we actually launched with risk-based pricing. We launched with a range of pricing from 0.3% to 2%, depending on the riskiness of the business. And what we actually found is the majority of businesses fitted somewhere about the midway mark anyway. And we decided it was just too difficult for a business to understand. We felt it wasn't transparent enough. So we changed after about 4 months after testing to a single upfront price in the sliders, so business knows exactly what they're going to get. There's no from price. You know from day one when you apply exactly what it's going to cost you, which is, you know, some of the new alternative lenders do, but the traditional lenders do not. It's always a from price. There's always fees that they don't tell you about. and we wanted to change the way that works. So we may still come back in with a counter offer at some point in the future, but at this point we're quite comfortable with the demand that's out there and the volume we're doing. So we're going to stay with what we've got for now.
Hi, have you done research into what other countries would be most right for the Wonga For Business model?
No. we operate out of a number of countries already with the Wonga.com model. We're in South Africa and Canada and the UK, obviously. From a business perspective, the product that we have is needed pretty much everywhere that small businesses operate. I think the issue for us is the products that we do have, the growth that we are having where we are at the moment, means a lot of our resources are used up focusing on those areas, which is probably why it took us so long to launch the business product and the pay later product. But yeah, we are a global digital business and we plan to keep growing on a global basis.
Right. With the default risk, do you underwrite that yourselves or do the lenders carry that?
Excuse me. So we lend our own money. So there's no.
So you don't have a lending community?
No, we lend our own money. We're self-funding. From a default perspective, I mean, just to put it into perspective, our Wonga.com default rate is single figures, which a lot of people kind of don't realise. It's a very mainstream product, even though it has a bad rap. Our business default rate is significantly less than that at the moment, but it's early days.
Who are your shareholders? Who are your main financial backers?
I can provide you all the details afterwards, but we've got a number.
Oh right, so it's like a partnership.
I know we've got venture capital backers.
Are they like known or?
Yes, they're all known. I normally have them on the presentation, but I've just recently taken them off because I've never been asked that question.
Hello, I was wondering, as data junkies, do you have any intention in the future of open access to the data you collect on businesses?
Good question. Everything that we collect is pretty much openly available.
Sure, I understand that.
So our secret sauce, as it were, is how we convert that data into an algorithm and use it to make a decision.
But at a single point of the project, that may be an interesting resource for you to actually provide on the enterprise whenever you capture information to springboard off your platform.
Never say never. For us, it's very early days, and I think one of the good things about digital is you can, as we evolve, we may use it for other things.
Okay, Russell, thank you very much.